Wow. It's even hard to say what my name is based on that last 10-15 minute rally, but I think it's Scott Redler, and I'm pretty sure I'm the Chief Strategic Officer at T3Live.com. Anyway, markets felt like it was going to have another distribution day. The second one within 3 days, and all of a sudden, the last 15 minutes of the day, you get a buy program that takes us right back in the range, holding upper support, and it's either great if you're just buying every dip, but it's a little I guess complicated if you're somewhat risk averse and you feel like we're going to get that pull in. So I know for me, I haven't really flipped net short during any of those pull-ins or adding down there anymore. I learned my lesson last week, but I'm paring down longs into that dip versus buying more. And then when we pop back up, I'm adding them back, and you can get spun around the same way there. So it's been a little bit tricky. There has been some places for cash flow that are acting better, but all in all, there's been some divergences this week where certain stocks, certain groups are getting to their 10, 20-day moving average where others aren't. So now's the time to really see what's holding in best, where if we do break above this recent upper range, what could continue besides just an Apple. So anyway, look at the chart of the S&P, you'll see that this floor that we've been talking about is pretty damn strong. This 10-day moving average, which is right here, which we still haven't closed below, is still ruling the tape. I'm going to give it a closer look here. You look closer, and every single time we've made a new move, we've basically tested this 10-day, and it's held. Right here was the last time we did that push-through failure. We came below it. At the end of the day, they sort of saved it, closed on it. Next day, same type of thing. And then we went. Here, when we made a high, they looked as if we were going to, finally shake things up, and then they closed us off the lows, and then we continued. So we're still stair-stepping our way up. We're still above the 10-day moving average, which is still very hard to comprehend because considering that usually the strongest stocks follow their 10 or 20-day moving average. So we haven't even tested the 20-day, let alone even thought about testing the 50-day, which is really what a lot of methodical traders think should happen after you get a move like we've had, all the way from the low in October, okay, up into resistance. You would think that kind of like you had here, you had a retest here. You had a retest. Ever since this gap and go from December 20th, market hasn't even thought about really retesting. So anyway, if you're short and you're net short and you're fighting it, there's too much money out there for you to do so. We look like we're going to be taking out this, what's this high here, this 1356 soon. When we do that, the next target will be 1370, which we've talked about many times. Morning call, it's right here. Sorry for maneuvering these things around, but basically, this is it. This is the next level. So here you are, holding higher. And if you've been fighting this move this entire time, hopefully you're not a member of the site, or you've been really quiet because we haven't seen many guys fighting the tape like that. So all in all, you can be a little bit disgruntled at this end of the tape because it's hard once you get to that that tail end. So as far as the overall accelerated uptrend, still intact, still on its way, and you just got to keep following it. So anyway, with that said, you don't have to be all in, you just do a little less. And right now, I have a little less longs on, and I'm just more specific on day trading. This morning, there were some good day trades. GMCR, was strong, went through a few buy prices before backing off. Amazon was down $1, had continuation through yesterday's high. It was a good long. It also became a decent short when it went below it, and then you had the news out there about losing subscribers or whatever, but then that bounced. You look at Apple here, still continues higher. Every time they try and bring it in, they just can't bring it down. I know earlier in the morning call this week, I said I feel like they're going to probably push it to like 520. Get everyone long some 510s and 520 calls, and then maybe they try and pin it. So tomorrow will be an interesting day if they could push it above today's high and then close it below. They haven't been able to close it below the previous high in a while, in a long time. This is that macro buy. If you're still long from, we talked about the pivot, here was your earnings, okay, and this was your data enter, your data add, and if you've been at this whole time, you're a better market participant than I am, because I've been out of my more intermediate shares and I've been just trading it. Yesterday we had a good trade through the 500, but today was the first day that I actually didn't even really touch it. But so as far as Amazon, it was a nice trade off the open, just to show you how things move off the open. Here's your your 3-minute chart, just to here you go. This is why for a day trade, it opened down when it traded through 192.50, yesterday's high. You had a nice dollar move, so you saw relative strength. You could have bought it, could have added here. I added there, I sold into strength, and then once it couldn't hold this upper flag, after knowing that it just had a few days up, you sell it. Some guys actually got short here, and then when it traded back below 192.50, you had your little red dog reversal because it pushed through the previous day's high, came back below it, so you had some cash flow. Then you also had some cash flow this way, and then from 92.50 all the way down to 90. So that was like the methodical trade before the news, and then it never really came back up. And then pow, this was when something came out, and I guess it was invalidated, because then look where we came right back to where it started. But overall, pretty methodical trade for cash flow with Amazon. A nice long add through here, and then obviously some guys looking for that reversal through the previous day's high after what has been a decent move off this earnings low. And now with a bit more sideways action, who knows? Maybe it takes out this what is this 196 area for a move to 202. So this is still on the radar. As far as Netflix, guys, sometimes it's helpful to cover your short early, which is what I did yesterday. I went home flat Netflix. For me, it was enough. He was at reversal. Here, remember that day we did a day and a half yesterday, was shorting it below this area of 122.15, went home flat. It gapped up, and it never showed relative weakness. If you are fighting Netflix, you see like, whoa, it has to continue lower, look over here. This is an area of support. And then you had a bigger area of support here. If you looked at the relative strength of Netflix today, it never, especially on the open, gave you, it never really broke the opening range. This was your first move, came back down, never really went negative. Okay, the low is 118. And then once it triggered above this 120.50, if you were trying to be short here, this is where you had to cover. If you didn't cover there, you had to wait for this opening range, which was like 121, and then from there, you definitely probably got squeezed out. So all in all, sometimes, if it would have went down to test this 112 and I wasn't short, or I would have probably been like, oh, I covered too early, because I've said that before. But sometimes if you just take your trade and from 130 all the way down to 118, that's 12 points. Then you wait to figure it out. Now we'll let it go sideways and see what happens where you have resistance and support. And I'm very happy they kept it in the game, because Netflix has been a good trader. As far as some stocks that broke their 10-day and held their 20-day, a lot of the financials. If you look at Goldman Sachs, I know it was really weak, but it, let's see here. Let me give you a better look here. This was, actually these moving averages are a little messed up because they're all diverging from each other. So the 20-day here was, what is that one? Oh, that's all the way down here actually. So it didn't actually even get to the 20-day, but it broke lower. It held this prior breakout area. So now I would say for this rally in the banks to at all continue, I would say that this low today should be your low to trade against long, this 111.40 area. JP Morgan, still hanging around, sloppy in here, very, very sloppy in here. I would say be tier 1 long at best, and then we'll see if we could ever get some momentum above that area. Bank of America downgraded today, rightly so. Stock has been really, really strong, closed near the lows. I would say right around here, I would be even willing to look for a buy. This is like 770, but this was when we talked about it breaking the downtrend right around $6. So from $6 to over 8, nice percentage move. I know the other day on Twitter, I think right on this day, I said I would sell some into this up open. So whatever. If I saved you 30 cents, send me a Christmas card or Hanukkah card. But anyway, it doesn't mean that it can't go higher the rest of this year. It just means that it was overbought, and we're allowed to maneuver these trades. As far as Celgene's concerned, looks really good. Stock has a nice upper flag, closed near the highs of the day. Looks like it's ready to take out 75. If this wasn't a biotech, I would probably be in tier 3. So since it's a biotech, I'm only in tier 1 just because there's too much risk there. So if we start getting above 75.50 tomorrow, what is this? No, sorry, 74.50. I'll add to see if we can get a clean breakout there. Caterpillar, this is like the worst trading stock I think I've ever traded. Maybe not ever, but or just the way I trade it, I guess it's not conducive to my style. But all in all, it's right back at that breakout level, right at 114.45. Maybe tomorrow is the day on Deere's earnings, but then you have to hold into that risk of the earnings to get above 14.60 for then new highs. So this looks okay. I'm in tier 1 overnight there. Qualcomm still hanging above 61, but definitely taking its time, but it is working off what's been a nice size move. I'm still in tier 1 there, and I'm foaming at the mouth to add above this 62. One day, I don't know when it'll be, but it's on the radar every day. We're going to get that move above 62 as long as this market stays intact, which it's been, and then that'll be a nice juicy trade, and hopefully it extends. Obviously it's not going to get an Apple type extension, but it could be a good cash flow trade for us then. IBM held its 21-day moving average also. Didn't have enough juice to start breaking above this 194. Remember this day we tried it and it didn't, it hurt a little bit, but now we closed off the lows. The 20-day moving average here was like 190 and change. So if you bought it into that, you have a decent price, and then maybe one of these days we'll get some momentum over that point. OAH is split. Not sure how they're going to show this chart, but it too is hanging around. I like the fact that it's split, because now we could really get some juicy size here. When we talked about this inverted head and shoulders, this was your tier 1, here's your tier 2. It's still hovering below this moving average. It's still hovering below major resistance. If this market's going to go, I'd really like to see this start to go, and I'll be a buyer above 43.80, 44, what could be a nice little move up to, on a macro level. There's no reason why this thing can't get to 50. And if we're doing that, I'm sure that the spiders or the S&P are probably on its way to 1370 or higher. Let's take a look at the XHB, the home builders, the homies, hanging around, still flagging. Wow, strength there, still look good. Lulu, yeah, still hanging around. I drew this morning with a bit of wishful thinking for a breakout. Maybe one of these days it'll get that stretch. We'll see. Walmart still hangs around. Looks like it's ready to break above this little downtrend. For those of you in a macro position of Walmart, still looks good. Still trending, which I showed this morning in the morning call. What did Tiffany do? Tiffany, oh, look at that. Tiffany, nice wide range bar. I think Vicky's all over this one. We'll see if it can continue to up there. Nice breaking of this lower pivot. And that's really it. I know it's Valentine's Day tonight, so as much as your ladies say they don't want anything, you better not go home empty-handed. Go home with flowers at least. Tomorrow, unfortunately, is the last morning call with Alex Steele. So that's a little upsetting to me. It's been a long time. She's done a lot to create the morning call what it is, and she has a lot of value on the fundamental side, and she's been a great friend. So tomorrow I'm going to give her some high fives, and I'm not going to cry. But we're putting together a really nice lineup for when she leaves starting next week. If you want to do a little research, Brittany Umar is, you could look up that name, Google it. She's very, very good. She's actually a consultant on the street. She does freelance, and she does a lot of freelance all over the place. She'll be here. Chow. I don't know her last name. She's going to be here training tomorrow. You probably won't see her. She's also at the street. Then you have Stephanie Link, who said she'll do it once a week, and then we have Jill, and we're going to have a nice little lineup. So there'll be nice diversity and nice different value added by different people, and we're hopefully going to show you different perspectives on what we do and why we do it, and that's the reason for the morning call. So you could see how all the different worlds collide because we're all from them. Technically based, I try and use common sense. I like to use a 1 to 3 day approach. I've been holding things longer. I'm trying to broaden my horizons by following these trends and staying with more risk. And I think a lot of guys on the side are trying to do the same thing by having some of the analysts come who talk more fundamentals, even like a Stephanie. It's it gives you some of the what behind the when, because we're the when. That's what technicals are. When is this going to happen? And the fundamentals is kind of like the what and the why. So I like to be the when, but if you know the what and the why, maybe you're not as worried about the when, and you'll keep it to the there you go. I guess I just made all that up in my head as I went. A little delirious. It's been a long day. I hope everyone did okay. As far as just to take a quick look, I want to show you guys something. Here's the S&P one more time. Look what this did at the end of the day. That is just crazy. If you were short and you drew this downtrend from the open, hopefully you covered right here. When it went above this 1345, that's why you always have to have your 3-minute and 5-minute charts up also. If you did so, you saved yourself 5 nice handles, and whatever that is in spiders, maybe 50 cents. And now we'll see if we could eclipse this in the next few days. Still a lot of headlines to deal with. So at this particular point, just do what you do best. Stay to your risk. Know your time horizon. And tonight, tune in Mad Money. Watch off the charts. You might get a special treat from the Red Dog at 6:45. Have a great day. I'll see you tomorrow. And definitely bring some flowers home for the lady or the man.